Next question. I trade a system wherein the hit ratio is 45%, average profit to average loss is 1.75. Trades are 2 to 3 per month, but there are back-to-back losses, at times even seen up to 7 losses in a row. This particular difficulty stops me from increasing my trading quantity even when capital is positive. Can you suggest a solution? So I have only limited information here, but what I suspect, or what I would guess here, is that it's something in which the backtesting parameters or the output parameters that you are optimizing, there can be some room of optimization there. So there are things like, so in the quant trading strategies, you look at the Sortino ratio as well as your different ratios which are there, and the one basic thing which almost every trader looks at is the drawdown. So when you are doing it, there's one concept of again a basic concept, but not that popular, which is the in sample and out of sample trading, and which is that you do not optimize your backtesting on the whole data set that is available to you. You break it down into in sample data and out of sample data. In the in sample data, you do all the optimizations that you want to do, and then you run that strategy on the out of sample data, on which it has not been optimized for, and you check how the performance is, in your case how the drawdown is, right? So if the drawdown is too high, then you need to curb a bit of volatility in your strategy. So which is the risk which is probably too high, in case if it is giving results which are showing back-to-back big losses in the out of sample data. So that's something that might help you, and you can get more confident of scaling up your strategy with your positive capital.